Hey guys, in today's video, we're going to be breaking down Bitcoin, Ethereum, and Ripple with technical and sentiment analysis, as well as explaining some elements of market psychology, how to trade the markets, and we're going to look at the phenomenon of absorption in low-cap altcoins. We're also going to be looking at some of the hottest altcoins that you guys could be trading right now and update you on our call spreadsheet for the Discord server. Stay tuned. This is Cracking Cryptocurrency. All right, welcome back to another episode of Breaking Bitcoin. Again, thank you so much for joining me. If this is your first time to the channel, make sure to hit the subscribe button so you can keep up to date on the latest. And if you're returning, man, give us those thumbs up. We really appreciate it when you slam that like button. All right, let's get into some news. I want to talk about some of the pertinent things that are swirling around the water cooler. Now, Coinbase added USDC to their Coinbase platform. This is their first stable coin that they ever listed. It's their first stablecoin that they've ever listed, and it is an ERC20 token. So let's keep that in mind. It's an ERC20 token. It is the second ERC20 token that Coinbase has listed after they listed 0x earlier this month. It is backed up by a 1-to-1 dollar ratio, and honestly, say what you want about Bitfinex. We have covered some of the FUD around Bitfinex and their banking crisis earlier on this channel. But the fact that Coinbase has approval from the New York Regulatory Board to have not only their custodial license, which is what I'll talk about next, but also to have this stablecoin backed up 1-to-1 dollar ratio, we can trust Coinbase from a financial perspective far more than we can trust Bitfinex. And this space is not about trusting people, and Bitcoin is not about trusting people. But when we're looking at trading financial services, and when we're looking at investing in securities, and we're looking at trading, when you're a large asset trader and you have a large portfolio, you need to make sure that your cryptocurrency is safe. And that's why there are all these whales sitting on the sidelines with millions, billions to invest in Bitcoin, because they see its potential and they know that it's going to be a technological revolution, and they know that it's going to change the world of money, but they're just not comfortable with depositing their money in an unregulated exchange. Say what you will. They're just, lots of people are not going to be dumping fresh $1 million bills into BitMEX or Binance. They just are not going to. Now, Coinbase and Fidelity and Bakkt and Deribit, that's a different situation. That's a different story. So we've been talking about this for a while, about how markets are made and how things elevate in price. You go all the way back to the videos that I shot earlier this year. I did a series on how markets were made. I'll link those. And I'm simply talking about the fact that the reality of the situation is that institutional investors need packages to get into the market first, and then they will, not packages, they need avenues to safely get their money into cryptocurrency where they know that they have some avenue of resolution should things go sour. They need to know that their money is safe, and they don't know that their money is safe at Binance or BitMEX because those are unregulated exchanges. So once they are able to safely get in, then they can invest their stock, invest their capital, get their positions bought in, and then they're going to be able to market this in the form of securities, in the form of ETFs, in the form of derivatives to retail investors. And that's when the money starts pouring in. You guys are looking for the bull run of 2018, 2019, just like you saw the bull run of 2016, 2017. You need more retail investors. And so what needs to happen in this space, if Bitcoin is going to go up significantly, is that these institutional traders need to be able to get in safely. All these things need to be approved. All these professional grade trading platforms need to be approved and regulated by the CFTC and the SEC so that we can actually start marketing these derivatives, these securities, these futures, these options to retail investors. And that's how it's going to happen. And this is what is happening right in front of us. You see the evidence. So anybody that is talking about Bitcoin is going to zero is stupid. It's just not going to happen. It's not going to happen with this level of institutional involvement that's happening in the markets, guys. It's not going to happen. If institutions were not interested in Bitcoin, they would not be actively investing millions of dollars into creating trading platforms, into creating security options, into applying for broker-dealer licenses, to applying for investment advisor licenses. And they are in waves, and they're starting to get approved. Guys, we are looking at what it's going to be. Do I think it's going to be 2018? No, I really don't. Do I think it's going to be 2019, 2020? Absolutely. Or 2020? Absolutely. So let's look here. Now, that USDC, it was developed between Coinbase and Circle, and it's on Coinbase right now. You can go buy some, but it's not on Coinbase Pro yet. But their idea with this is that you can transfer it instantly between exchanges. You're able to store your value in there. You can easily switch from that to Bitcoin if you're trading against Bitcoin, and again, it's more liquid, so you can send it throughout the digital marketplaces, and it's backed up, so you can always get your money. It will be on Coinbase Pro soon, so we're going to see how this actually affects the trading markets moving forward. All right, now Coinbase also got their custodial license approved by the New York Board of Regulators. This is important. This is what I was just talking about. This applies to most states. So the Coinbase Custody Trust Company Limited Liability Corporation is approved. And what's interesting, and this is what I want to point out, if you're looking for, not only is this important in regards to Bitcoin's valuation with the idea of how markets are made and institutional investors actively getting in, but this is interesting if you're just looking in the short-term future of a certain asset like Ripple. So if you look, if you read closely the licensing agreement, they got approved to custody Bitcoin, Ethereum Classic. Let me start again. Bitcoin Cash, Ethereum Classic, and Ripple. Now, as most of you are aware, Coinbase does not offer trading on Ripple at this point in time. Yet they specifically asked for Ripple in their custodial license and got approved to custody Ripple. What could this possibly mean? I'll tell you what it means. Ripple is going to be listed on Coinbase in the future. Ripple will be listed on Coinbase. Now, do I specifically think that this is directly going to be tied to Ripple's immediate spike up in valuation? No. But do I think this is something important to watch and know that more professional grade institutions are investing in platforms that will be able to have Ripple on them? Yes, I think it's very important. And I think you'd be really, really dumb if you've got large positions of Ripple to be dumping it right now. All right, Fidelity. So Fidelity is going to be launching a trading and storage platform. They have got approval for this. Now, I just want to remind you guys that Fidelity is one of the top 5 portfolio management companies in the world. They have $7.2 trillion under advisement, under management. And there's some articles on this. You can look into this. But I think the common number right now is $360 billion, which is more than the entire market cap of the cryptocurrency space right now. That's 5% of their portfolio. If they were to allocate just 5% of their portfolio, they're going to more than double the cryptocurrency market capitalization right now. And what that means for price is that it doubles, guys. So very, very exciting to see what Fidelity's involvement is going to be. I'll be updating you guys on this more as we move forward. Some listings. Decred got listed on Binance and pumped. PumaPay got listed on Bittrex and dumped, and then kind of went up. But I was looking at PumaPay. It looked attractive. I mean, but the liquidity was so low. It wasn't like sub 50 Bitcoin, but the volume, 24-hour volume, was like around 80 to 100, down to 60 sometimes. And it's just not a market I want to trade in. You just don't have the liquidity to get into and out of significant positions. I mean, if you were trading with a few $100s, you could, but even still, the market, the depth of the market was really thin. So, congratulations to those who were able to play that to their advantage. I watched it for a while and then I stayed out. It's just those aren't the kinds of trades that I like to recommend. Those are the kind of trades that if you're a small trader and you're entrepreneurial, that was a good opportunity. Last thing I want to talk about is Bakkt is going to be launching on December 12th. Their futures platform, they have been reviewed and approved by the CFTC. They're going to offer one-day physically delivered Bitcoin futures, contracts, and physical warehousing of that Bitcoin. So this is significantly different from BitMEX, significantly different from Deribit. So I'll be interested to see how this plays out. Now, Deribit, a lot of people are talking about Deribit, about switching from BitMEX to Deribit. But the reality is that I mean, just look at Deribit's liquidity. It's god awful. It's just terrible. I mean, if you really want to get in and you know, you want to be you're a United States investor, excuse me, and you want to trade futures contracts, you know, Deribit's where you want to go. But you know, I would really be waiting and looking. You know, if you have a larger portfolio, you definitely want to wait. If you're a small trader and you're a small player, Deribit's kind of your only option. But just the liquidity sucks, man. I'm just letting you guys know the liquidity sucks. All right, so that's enough for the news. Let's take a quick look at our updates on our signals, and then we'll go to the charts. All right, taking a look at our signal updates here, guys. We've had a fantastic month, 290.97% so far on closed calls. I only see one red here, and that is a less than 1% loss on EOS. So we really have had a fantastic week. This week we were able to close out Encash at 10%, Monaco at 17%, OMG at about 8%. Let's see here. We had on BitMEX, we had a Trek scalp, or we had a TRX short for 15%, a Bcash short for 8%, and an XRP short that we just closed. This is target 1, and we just hit target 2 and target 3. So I actually need to update this, and I will do that here in a little bit. But we've got our open calls here. We're still in Metal, BNB, Hypercash, Syndicator, ZIL, Walton Chain, and Sky. Things are looking quite nice for our open calls. We're only down slightly on Syndicator and BNB, and I already updated the premium channel earlier for that. So really a fantastic month. Congratulations, and thank you so much to all our subscribers and premium subscribers for supporting this channel and joining with us in our trading, because we learn from you. We work best together as a team and as a group, and I really thank you guys so much. So let's get to some of the charts and see what the markets are doing today. Just on a personal note, just so you guys know that this is real life stuff right here, I recorded about 30 minutes of footage and realized my microphone wasn't working. So this is take 2. All right, let's take a look at Bitcoin. Now, Bitcoin is amazingly range bound again. The daily range has narrowed to an incredible $19 differentiation from a daily high close of $6,394.70 to a daily low close right here of $6,415.08. Again, we're going off the closes because we want to know what the inside bar is so that we can break the inside bar to the upside or the downside and know who's in control of the market, the bulls or the bears. I mean, right now, Amazon stock is more volatile than Bitcoin. Now, I'm not suggesting you rush out and set up retail brokerage accounts. Don't forget that we have the alts to play with. However, to each their own, and I can understand the frustration creeping in from those who just want that patented Bitcoin volatility. You know, for traders, for us to profit, we need volatility. So unless you're on BitMEX and unless you're trading altcoins, you're just not seeing the profit incentive to trade Bitcoin right now, and I understand that. Now, I want to take a look at the Fisher Transform, and the Fisher Transform's fairly neutral. The sine wave is not crazy, but we are bottoming above the 0 line, and that is a bullish sign. What that indicates when the Fisher Transform bottoms above 0 is that the uptrend is likely not exhausted. And we can see here that the Fisher has not has not topped below 0 once, which is a bearish sign, meaning that the uptrend is truly exhausted. So this is a good sign. We're still holding on. The Fisher is telling us not to lose hope, guys. Yeah, again, conversely, when the Fisher tops below 0, as you can see it did here, price continues to go down. And so we have been, you know, we were in an uptrend here, and now we are in a slow uptrend with a slight spike down right here. So we're looking to recover to those levels. Now, zooming back in, if we take a look at Ichimoku Cloud, we can see that we are far below the baseline right here at 67.20, 67.25, 67.20, right around there. And we're far below the cloud. Now, the cloud directly above us is 67.65, although by the time we get closer to the cloud's going to be in the low to mid 6,500 range. That means we don't have a lot of resistance above us in the form of the Ichimoku. So I think if we start tearing off, I'm not looking for resistance until we get to this $6,500 level, which I think would be a significant point for us to go up to. So we've got $100 up to go before we start hitting significant resistance. Our volume profile right here tells us that we're at the highest node of traded volume right now. That means the most Bitcoins are trading hands between buyers and sellers at this current point in the market, at this horizontal line of price. And we're consolidating. So, and we're slightly below it at 64.35. So about $3 above us. This could act as short-term resistance. We'll see if we can get above this point of control and start trading to the upside. So on the daily time frame, just to wrap this up for you guys, we're looking for a close here above 64.15 to indicate that the bulls are back in control, or we're looking for a close below 63.94 to indicate that the bears are back in control, because right now we're respecting the inside bar of yesterday's candle and we're respecting the high and low closes of our trading range. So this is a neutral technical analysis chart. We look at sentiment analysis. As you can see here, the red line indicates shorts on Bitfinex and the green line indicates longs on Bitfinex. And we can see here that we have had a drop in longs and a slight uptick in shorts. However, we don't have a we don't have a confluence of volume here to confirm that movement, and it's not really a dramatic movement. So what this says to me is slightly bearish, because we're not at the top of an uptrend and we're not at the bottom of an uptrend. We don't have a lot of significant volume spike one way or the other. We're in consolidation and the shorts are starting to pick up. So that lets me know that the sentiment on Bitfinex at least is to the downside. And we can see that as indicated by the red candle. However, we do have a long tail, which means that the buyers are still in the market trying to accumulate. You can see that we're also consolidating above the 0.618 Fibonacci retracement line. We wicked all the way down here to the 786 Fibonacci retracement line and stayed down here for a while before shooting back up. And now we're going to try to see if we can start breaking to the upside. However, what do we do when our technical analysis is neutral and our sentiment is slightly bearish? Probably the best thing, since it's only slightly bearish, we would almost always want to go off sentiment analysis over technical analysis. However, the problem here is that it's fairly neutral and it's only slightly bearish to the sentiment analysis. So what is the best possible thing to do in this situation? Well, probably nothing. Probably best to sit on your hands unless you are position building for the long term for Bitcoin. But if you're looking to trade in the short term, the best thing is to sit on your hands and wait for a bar break to the upside or the downside and wait for some more volume to pour into the market to tell you which way you need to trade. And I know that's difficult to do, but we've got a lot of other trading opportunities and trading potentials to look at. Let's go look at some of those. Looking at Ethereum, Ethereum actually looks a little bit more bullish here than yesterday. We're still looking to form a new daily low after breaking down from yesterday's inside bar break. However, we can see lots of buying interest in the market as indicated by this long tail to the downside on extremely low momentum. This means but it's not enough to push price up, but it is saying that all the selling pressure is being easily absorbed by Ethereum buyers in the marketplace. So we're finding a place of confluence. We're finding a place of price acceptance. We also see an uptick in selling volume that indicates that there's more selling at this price, more volume at this price, but the buyers are just eating it up and absorbing it. This actually looks like a good spot to enter a long position from, I'm not going to lie. Volume profile again lets us know that we're consolidating right along that point of control, so the most Ethereum is being traded hands right here at this market. And we've got a few pockets of low volume, which is where we look for price to just blow past nodes of low volume. And we look for resistance or support from nodes of high volume. So you can see here we have nodes of volume at 210, at 218, at 223, 220, and those correspond pretty good. That 223 corresponds pretty good to the next Fibonacci line. You can see here that we are consolidating right along that magical 618 Fibonacci retracement after falling down to the 786, and that was the best time to enter the market. Long bearish candle down with a big spike in selling pressure at the end of a downtrend. That means everybody was trying to short the market here, and everybody was wrong, because what we're doing is we're trading against the trend. You buy into the market and price moves up. So you are in quite decent profits if you entered that short at the right time, as I try to tell people. All right, so I don't see a lot of resistance above us. That 6220, or excuse me, that 220 mark corresponds pretty nicely with the Ichimoku cloud. So this is the area I'd be targeting if I were looking to establish a long position here. Sentiment analysis, longs are slowly picking up, Shorts are slowly falling off without a huge spike in volume one way or the other. This is bullish to me, guys. This is bullish because we're not at the end of a downtrend. We're not at the end of an uptrend, and we don't have a massive spike in volume one way or the other like we see here. We see here that this is the end of a downtrend. We have a massive spike in selling volume. Time to buy. We see here that we have slightly an uptrend. We've got a big spike in buying. Time to sell. And again, price retraced. So what is it time for now? I think this is a natural time for price to slowly drift upwards based on the technical and sentimental analysis that I'm seeing here. So Ethereum looking more bullish than it did yesterday, and a better setup than Bitcoin at the current time. All right, time for our favorite coin, everybody. Ripple, the big favorite alt that gets to play with the big boys now in our daily analysis. Now, Ripple is really the coin that a lot of people are banking on to make them rich. Just keep in mind that could also make you poor. So here's the skinny on XRP. Again, we're flat as Miley Cyrus. Not as flat as Miley Cyrus. I'd say we're a little we're not as flat. Bitcoin and Ethereum are, Bitcoin's as flat as Miley Cyrus. Ethereum's drooping down a little bit. Ethereum's bouncing around just a little bit here. But on the daily time frame, we can see that on the current daily candle, we have respected the low that was established here at 44.9, and we've respected the high that was established here at 45.8. So that's where we're looking. We're looking for the breakouts of those two ranges. Current price bar has not broken down. We haven't had a bar break is what I'm trying to say. We're still trading within the inside bar of yesterday's candle. Although I would say that price is trying to make a good old college try of trying to climb here, but we've got this spinning top doji. It's a little sideways, but RSI is fairly flat, trading above 50, so that's slightly bullish. And we see that the Fisher transform is looking to bottom here above 0 as long as we don't fall down. That means that the uptrend is not exhausted. All we're looking for is the bullish volume to pour in. We're starting to see a little bit of bullish volume here, a little bit less here. We'll wait for this daily candle to close. Or excuse me, this daily candle just opened. So we'll look for this daily candle to close here fairly soon. Let's see here. Now, if you're looking to buy into consolidation, XRP doesn't look too bad right here. I'm not going to lie. You know, it doesn't look like it's going to make a huge spike up or down, but if we look at sentiment analysis, we see that shorts are dropping down and longs are picking up. And unless we see a big volume spike, I'm not going to be overly worried. And again, I want to talk about the fact that the sentiment on BitMEX is diametrically opposed to Bitfinex. So maybe you want to trade against Bitfinex right now, but that's not how I've been trading for the last 6 months using sentiment analysis. So I have to stick to what I know and play it safe, especially with what I'm going to recommend on this channel. So break it down. Bitcoin looks neutral, slightly bearish. Ethereum looks like a good setup, but not bullish yet, but it's a good setup for a trade is what I'm trying to say. And Ripple looks neutral, leaning bullish. So we'll see what happens here, guys. All right, so I want to go over a little bit about counter trend trading with you guys and how I look at the markets and how I trade. For the most part, there's lots of different ways to trade. I have a certain strategy for breakout trades. I have a certain strategy for scalping. I have a certain strategy for trend trading, either in an uptrend or a downtrend. I have strategies for trading in the consolidation. And but I heavily rely on sentiment analysis and counter trend trading because those have the highest risk to reward, in my experience, the highest probabilities of success. So, but I also want to talk about a market phenomenon here of absorption, which is what we're also seeing in at least Bitcoin and Ethereum, where we're seeing large, well, not really. We're not really seeing it so much in Bitcoin and Ethereum, but we could potentially be seeing it. And you'll understand, we're talking about absorption. So taking a look at the daily chart on metal, yes, this is metal. This is not every other altcoin that's ever been. We can track market psychology that plays out across time on any asset. You know, if we look at the history of metal, we can see the forces of volume distribution playing out. So I'm going to get my pink tool right here. And what I just want to point out is that, what do I mean by counter trend trading? Okay, well, look, we have right here, we have a sharp move down, and then we have a huge spike in selling right here. And what this indicates is that all these people who bought in here and here and here on this big green bar all these people got trapped when everybody decided to sell at this top. And if they held on to the position, we zoom in here a little bit. They held on to the position. They bought in here, they bought in here, they bought in here at the top. This is where most people bought in. You can see that from the bullish candle bar, from the bullish volume bar right down here. And then the market dropped on them. And then everybody tried to get out of the market by mass selling right here on this candlestick, on that massive, gotta zoom all the way out, right here, on that massive red bar of volume right here. And that was the worst place to sell. I mean, but it just happens. This is the way the markets work. You know, they can't help themselves. Retail traders can't help themselves from getting trapped in bad positions. This is what's going to happen to you if you take a bad setup and you don't have a tight stop loss and you're not trading right. I mean, this is not a setup that I would take. I mean, this was a setup I would have taken. This looks like a good, 50% retracement. Big tails to the downside, and then we have a little bit of a spike in bullish volume. But this is the setup I would take, honestly. And even though it might not have been as profitable or volatile as this move, this is the safer setup. You see here that we have a big spike in selling volume, and price goes up. And here, right here, we have a big spike in buying volume, and everybody tries to buy in on this candle right here when they think the uptrend is going to go up. We can see that indicated by that long tail down. That's all the sellers. That's all the sellers that got trapped right here, or that got trapped here, or that got trapped here, trying to sell at break even. So that's the way I want you guys to think about the market. What are all the other traders doing? A lot of traders are just looking to break even or get out at a slight profit. So you can see here that that there was a lot of buying right here, and a lot of those positions got trapped, and a lot of them sold here, but not all of them did. A lot of them are holding, so when price goes up here, they're trying to get out at break even or a slight profit. We can see that indicated. They take advantage of this buying pressure that provides the seller's liquidity, and price goes down. All right, so continuing on, again, we see all these buyers in the market. People think the market's going to go up. Again, we have a huge spike in buying volume right here. And what happens? The price goes down. So you don't want to do what everybody else is doing, because everybody else is mostly stupid and doesn't know what they're doing. And I don't say that to be rude. I'm just saying that most people aren't good traders. So you want to be a counter trend trader. That's how you really can make some money in these markets, guys. So we can see here just some examples of counter trend volume trading here. Now I want to get to our current market right here, and what I'd like to do is, there we go, I'll try to just move that up here a little bit. All right, so this is the daily chart, and we can see here that the downtrend really ends in the middle of August of this year. That's when we really hit this market bottom right here. And we don't have a selling climax, so this is not a traditional accumulation phase, but we could see a selling climax right here. And what I mean by that is, you see that we have a lot of selling volume right here at the bottom of a downtrend, and price naturally goes up. Again, that's what I'm trying to point out to you guys, right? When there's a lot of selling, you want to be buying. When there's a lot of buying, you want to be selling. Not all the time, but take that as a general rule of thumb when you're looking at tops and bottoms of markets. You're at the bottom of a market and you see a lot of selling, it's a good time to buy. If you're at the top of a market and you see a lot of buying, you're looking to get out. You can see that if you would have bought in here, you would have caught all of this. See, we would have bought on this candle right here, and you would have been able to catch all of that. Potential 50% profit right there. All right, now, but here's what I want to talk about. So this indicates to me that pretty much everybody that wanted to sell already sold. So this is what's known, this area right here is what's known as a selling climax at the end of a downtrend. This causes an automatic retest, and there's some good buying volume right here, but that buying volume exhausts the buying pressure, and we come back down into consolidation. And then we have this. Then we have these candles. Look at these. These are interesting to me. Big buying volume right here on this candle, on this candle, on this candle, and on this candle. Now these two candles are a little bit different, but let's look specifically at this candle, which has insane buying volume. Look at the volume. This is high. This is the most volume that's ever been traded. I mean, literally, compare these candlesticks over here to these over here. They're just massive. They're massive. All of them are bigger. All of them are bigger than these, with maybe the slight exception of this one for some of these smaller ones. But where's the volatility? The market isn't moving at all. And why isn't it moving? Because there are limit orders on the books, sell orders on the books, that are easily absorbing all the market buys that are taking place. This means that supply and demand has reached an equilibrium. This selling climax, combined with this automatic retest and this distribution right here, lets me know, this accumulation right here, lets me know that everybody who has wanted to sell metal, for the most part, has already sold metal. There's no sellers left to push the price down significantly further. And concurrently, there is also significant accumulation taking place right here that is easily being absorbed by the market to not move it. This is not manipulation. This is how markets move, and you need to be aware of this. So take that as you will, take that advice as you will, but I will just say that we do have an open call on metal in our premium subscription channel, so might be a good asset to check out. I want to thank everybody for joining me today. It's been a long video. This video is already going on 25-30 minutes, and I apologize for the length. I just want to break down everything for you guys and explain the markets as I see them as the best I can. So I don't think I'm going to get to the altcoins today. If you head on over to the server at discord.crackingcryptocurrency.com, you're going to be able to see all my technical analysis in plain text form as I put them out mostly every day. And we'd love to see you in our premium subscribers channel. I think you'd really benefit there and increase your trading skills and increase your profitability. Again, we're not making things up. The signal tracking sheet is what it is. That is our true win-loss record sheet. You can come in and feel free to DM anybody in a Discord to question that or see what's going on. So, I've been Justin Wise with another breaking Bitcoin market update for crackingcryptocurrency.com, guys. Trade safely and be good.